Good morning to every one of you. Very good. நல்ல இன்ட்ரெஸ்டிவாக குட் மார்னிங் சொல்கிறீங்க. அதனால் ஏற்கனவே 12 இல்லஸ்ட்ரேஷன் படிச்சுட்டு நீங்கள் இருக்கீங்க. இப்போ இவ்வளோ தூரம் ஒரு குட் மார்னிங் நல்லா சொல்லும்போது அதுக்கு மீனிங் என்னென்னா, அப்போது 12 இல்லஸ்ட்ரேஷன் புரிஞ்சிருக்கு, அதான் மீனிங். இல்லைன்னா இந்த அளவு ஒரு இது வராது. வெரி குட். இப்போ நம்ம என்ன, டுடே வி ஆர் கோயிங் டு ஸ்டடி அபவுட் த final accounts of the insurance company. That insurance companies have to prepare the final account in schedule form. That first one seems to be preparation of the policy holders account, it may be called as, or it may be called as revenue. This purely policy holders account. Because insurance companies working for the benefit of the policy holders. That means 90% of their earning to be shared to the policyholders. That is the rules of that life insurance company. So in the insurance company, there are two types of insurance business. One is life insurance business. Another one is general insurance business. Life insurance business, everyone know. General insurance business is motor policy, accidental, fire and all. Marine, fire and other three categories are there in the general insurance. That final account format for this particular life insurance and general insurance are more or less same, some differentiation. This final account of the life insurance company we are going to see now, that is to be prepared in 15 schedules. And the first 4 schedules are meant for the revenue account, otherwise called as policyholders account. Now let us study what are the revenue schedules. First, in the revenue account, you see that income should be taken first and the expenses to be taken second. Here, in schedule 1, every income should be taken. Prime income for a policy life insurance company is that, what is the premium? Thereby, first one is in the revenue account, first schedule is meant for premium earned. And next in that heading you have to write other incomes. Other income means there may be some, rent received for the building rented, or any other interest received for any investment, dividend received for also for holding shares in other companies. That all to be considered as the income and taken after the adjustment of premium. In the premium adjustment is, there are 4 kind of adjustments: outstanding for this year, outstanding for last year, outstanding for paid in received in advance for this year, received in advance for last year. All to be adjusted if there is adjustment available. Then the second schedule is meant for that commission. Commission is a major expense for insurance company. Thereby, in the second schedule, commission is taken into account. The adjustment related to commission to be taken there. Commission adjustment means outstanding commission or commission paid in advance. Related to this year or last year, that also to be taken into account. If current year you are adding outstanding, means last year should be deducted. Easy mechanism. Advances should be deducted for current year. The last year means it should be added. Okay, it's simultaneous, it may be taking form of assets or liabilities. Then third schedule is the operating expenses. Operating is a major expense because it contains lot of items other than other schedules. Lot of item means in the sense that say salary paid, then benefits necessary, some benefits paid to employees, contribution of provident fund to employees, then operating other operating expenses. This salary is a major expense, other way maybe rent paid, so for some branches rented means that expense. Interest paid. Then all payments except commission and that benefits, that is the policy amount, closing policy amount, this should be operating expense related. That may be managerial expense. That audit fees, then legal fees, everything. So some tenure categories may be specifically given in the schedule prescribed by the Insurance Act and Insurance Regulation Act, I think. 2 acts are there for the insurance companies. Accordingly, that provisions should be adopted. Then that one is fourth one is benefits paid. Benefits is due to the maturity of the policies amount to be paid. Any accidental means that would be paid. Any premature closure means that should be paid. All that benefits paid category. So you have to classify the first schedule as total one A, and the second one altogether B. Total of that should be taken as B, and B total means expenses. Then you have to find out the previous one. I am asking first one as already. Then I see that it is taken schedule B. Other up to the benefits paid. You have taken the total B. Then other expenses, that is amount ceded to reinsurance, everything to be adjusted and taken in schedule C. Total would be C. Thereby surplus would be D, considered as D. D equal to A minus B minus E. So A is the only income, B is amount of expense of total schedule 2 and 3, and 4 may be taken in C. And benefits, that would be called as surplus. And in the surplus, this is a PBT without any adjustment. Then appropriations to be adjusted here. Appropriation means transfer to shareholders account, transfer to other reserve, and all the statutory reserve. Everything should be done in the appropriation, all appropriations should be taken here, and the balance should be taken to the balance sheet. That is the condition. Here that profit and this is called life assurance fund. You have to take into account of the beginning of the life assurance fund. Then add that life assurance fund in the beginning, and the life assurance fund balance to be transferred to balance sheet. That altogether is called life assurance fund at the end. That would only be taken to the balance sheet. I think it is now clear for you. This is the this means that policyholders account, or otherwise it is called as the that revenue account of a life insurance company. You see that there are many life insurance companies nowadays because after the policy of the government after 1991. Okay. Now let us see about the balance sheet. How the balance sheet is prepared. Balance sheet prepare means balance sheet start from schedule 5 and end with schedule 15. Thereby 11 schedules are there. The 11 schedules, 3 schedules are for the liability, and 3 means 8 schedules are meant for asset side. So the first one is share capital, 5th one is share capital, 6th one is resource and surplus, then 7th one is that policy holders fund. Okay. 7th one is the policy holders account. Then that provisions for the liabilities, the insurance, reserve, all reserves should be taken after that. Okay. So first one is the that is shareholders fund. Second one is the borrowings. Okay, sir. Second one is the borrowings. That is the 6th schedule. Then 7th one is that reserves. Okay. All reserves should be adjusted here, and total of that should be taken. Here we are not taking current liabilities. That would be taken in the asset side. Then in the asset fund. Here that liability is called as source of fund. Source of fund, I mean all liabilities, fixed liabilities, only fixed liabilities, and the reserves are taken in the source of funds. It is the liabilities termed as source of fund. Then total of that you have to take. Then in the application of fund, current liabilities should be deducted from the current assets. That we can see how it is to be done. Then you see that A schedules that it starts with 8 that is that investment. Okay, 8 is investment, 9 is the loan, then 10 is the fixed asset, then 11 is the advances, 12 is the current assets. Okay, current assets. Then 13 is the current liability. Then 14 is provisions. 15 is the miscellaneous item. Okay, miscellaneous item. Now let us see how it is stated. First one is that in the application of investments. Investment means this company might have invested in shares and other long-term securities, government securities. That would be taken as an investment, long-term securities, government deposits, whatever it may be. All because this is the only source for the concern to earn income, to provide additional amount for the policyholders. Right. Then next one is the loan. Is a major item. Loan may be given to the policyholders out of their policies. They only having policy for 10 lakhs means there is some provision that 50% or 70% of that can be given as a premium paid. Out of the premium paid, certain percentage they are eligible to get loan. Because there is guarantee, because they have already collected the premium. So that loan total to be taken in the schedule, I think, 9. Then you see that next one is scheduled 9 to be. Okay, 8 and 9 that loan. Then next one is the fixed assets. Okay, fixed assets means land and building, then other furnitures and all equipments, computer and everything. That is what is fixed assets. Then other one is that advances, isn't it? Fixed assets, and next one is current assets. In the current assets, there is no schedule. Schedule is represented as that 11th one is cash and bank balance, and 12 is the advances. Okay, sorry. 12 is the advances. That is current cash. Current assets is termed as cash and cash balances. That is mentioned in Schedule 11. And other current assets is taken in Schedule 12. Then you have to make the total of A. Total of 11 and 12, that is called as A. Okay. Then current liabilities should be written. Current liabilities mentioned as Schedule 30. Okay. Then provision is 40. Provision means also a current item. Then the total of the current liabilities and provision, that also a current item to be taken, that is called B. And the total of that Schedule 11 and 12 means current assets and the other current assets, advances and everything. That current assets means cash, bank balances. Okay, that is called 11, and other current assets means 12. That would be total called as A. Current liabilities means including provisions that for that Schedule 13 and 14 total. That may be B is called B. A minus B is called net current assets. Sometimes net current assets may be a negative value. Means that would be mentioned, and that is a rare case only it would be. Normally it won't be like that. That would be called as current. Then you see that about the Schedule 15, that is miscellaneous item, expenditure not written off. Debit balance or profit loss account. Okay, miscellaneous item means that which is assets. That also should be considered. Then that total, understand, 15 is miscellaneous means that is not miscellaneous expenditure. That total in the 15 schedule. Separately you have to total and brought it here, then only it will be given attraction, thereby it will be easy for you. The application of fund will be equal. Will be application of fund will be equal to the source of. Okay. Yes. Thank you very much. Yes.